Well, what if I told you that you could lose 5 trades and only win 4 and still end the month with a plus 10% profit? Well, that's exactly what we did in January, and in today's video, I'm going to talk you through every single trade that we took to get there. So yes, everyone, we are back and we haven't gone anywhere. We still have been trading all throughout January, and we just decided to lay off the content a little bit for mainly personal reasons. And if you can't tell, I'm completely bunged up and I'm recovering from a chest infection. So if you see any cuts in this video, do bear with me. It's probably where I've just been coughing and I needed to cut it out. But like I say, we have been trading through January, and anyone in the community that will know, one of the main discords that we all were a part of finished at the end of 2026. So that meant that me and my brother, it almost forced us to go on our own, make our own decisions, take our own trades and see how we get on with it, because we felt like we were more than ready. We also thought that being a part of the bigger community was almost a little bit holding us back, because it sort of stopped us thinking for ourselves and thinking of our own trades and taking our own positions. And like I say, we thought we were absolutely more than ready. So in January, we've just been concentrating on our own trades. We've made a few tweaks to the strategy that I will cover in future videos. We were more than ready to go on our own, and like I say, we've still been building up our own little Discord as well. So hopefully, if you guys want to get involved in that, then do come over. I'll leave the link in the description to that. But without further ado, I'm going to talk you through all of the 9 trades. No, 9 trades. Yes, 9 trades that we took in January, and we finished plus 9%. So let's get on with it. So the first trade we took was actually this gold trade, and it was on the 6th of January. And this turned out to be a pretty good way to start the year, to be honest. We ended up taking the trade for a plus 4%, and I'm not going to go into too much detail, but basically that's one of the changes that we've made, especially with the 5-minute charts, is that we're no longer going for 1 to 1.5, 1 to 2s, 1 to 3s and stuff like that. So we've made the decision to just stick to straight up 1 to 4s on the 5-minute chart, just because we think that gives us a little bit of a better risk to reward. And in my head, risking 1% to get 1.5% back, that's not really worth it. So we've made the decision to stick with 1 to 4s, and it has very much paid off this month, because I think all of our winning trades have been, spoiler alert, 4% on the 5-minute chart, and we're going to run through all of those in due course. But the first trade we took was this gold trade, and I'm not going to run through the strategy in depth, because I'm not going to spend too much time on each pair, otherwise we'll be here for an hour. But basically, just to give you guys, if this is the first video you're watching of mine, just to give you a very, very, very quick run through of what we look for in the trades. Basically, what we're looking for is a short, sharp move up. We then want a small retracement to come back close to the zone but not touch it. And then we want to break that high that got made here, which caused the liquidity. In this case, we actually made 2 lots of liquidity and broke the high again. So for us, that's sort of double confirmation. And then we come down to the zone. We see one of our entries, and if you want to know more about the entries, I've got a video on that on my channel. And if you want to see the video which covers the strategy in depth and you learn all the different intricacies about it, there's also a video on that as well. So do go and check it out. But basically, that is a very, very quick overview. That pattern there that you see on screen is pretty much what we look for. And that trade on gold was a pretty textbook trade, to be honest. We got in this trade on one of our break of candle entries. So we waited for the candle to tap the zone. That candle closed bearish, so we're waiting for that candle to then be broken for us to enter the position. And that sort of allows us to capitalize on the momentum if the close of candle would have been a lot higher. So our thought process behind this was, if I stay on the 4-hour just for a moment, you can see here we're actually coming off a really, really big, or obvious, let's say, supply zone, or demand zone, sorry. So that gives us bullish intent behind that. So although we see this big massive move down and then lower highs and lower lows, here, if I zoom up a little bit, we actually see we tried to break the high, failed it, and we tried to break the low and failed there as well. And then as soon as we failed to break the low, we then had the big push up, which took out all of these highs. And that for us is confirmation of a bullish trend. So all we do once we see that is we just simply look for our entry point, look for our strategy within that, and then we can take the trade. So you can see here, we've just been consistently making higher highs and higher lows all through that, and that was our entry point, and we're still making higher highs and higher lows. So that was sort of the fundamentals and the thought process behind it. So although we see this big move down and then some lower highs and some lower lows, if we zoom out like we did, and we can actually see that it's actually reacting off a big demand zone, and that's our cue to then go bullish or wait for the confirmation that we're going bullish and then take the trade. So that's what we did on gold. So that was our first trade of the month, and that was plus 4%. So we kicked off the year really well there. So our next trade was UJ on the 30-minute, and this was actually a 1% loss, which hit our stop loss, I do believe. And if I remember correctly, this was just a very unlucky trade, and the analysis behind it was correct. So we were right in the direction. We just got caught by a wick that took us out before it then went in its intended direction. So the thought process behind this was that obviously we had this big move up and then big move down. So naturally we're going to want to correct the rest of that. And then as soon as we made this big move down, if I get my tool out for it quickly, you can see we're making lower highs and lower lows again. We then break that and then start moving in the opposite direction to then start correcting the rest of this move. And that again is our cue to go bullish. And all we're doing simply then is looking, as same as before, looking for our pattern within that and then taking the trade. So we know we're going bullish on this pair. It was just a matter of timing or looking for our strategy and then timing the entry point right. And as you can see here, again, it was very similar to gold in that it's a pretty textbook trade, to be honest. We had our move off, we had our liquidity, we had a double level of liquidity, and then we came down. We even got a little bit of a fake out on this one as well. We tapped the zone. We waited for the candle close on this one because the candle close wasn't too far from the zone. We obviously got used as liquidity, and it, for some reason, ended up taking us out. But this trade in particular, in back testing, I would take this 10 times out of 10. So I've got really no complaints about the analysis or anything like that. So if I take it in back testing 10 times out of 10, I'm going to take it when it pops up in the live market as well. So I'm not really fussed because the analysis behind it was correct. We were just very unfortunate of getting taken out of the trade pretty quickly after getting in. So that's UJ. Like I say, we're still up 4% from the gold trade. That's minus 1%. So we're down to plus 3% now for the month. And we'll move on to the next one, which is GJ. So with this one on GJ, it was on the 30-minute chart. And there was actually a bit of a gap between the trade that we just covered on, which happened on the 8th of January, and then this one, which was about a week and a half later on the 19th of January. So there was a little bit of a gap where the markets were very quiet, and I think there was just a lot of news in that time as well. But with this one, we can see there was definitely mistakes, or not mistakes, sorry, because mistakes happen, but definitely lessons to be learned in terms that we can't always rush to get into trades, and sometimes we do need to make sure we're doing our due diligence before the trade, before the entry point, to make sure we're not reacting off any zones that could catch us out like it did in this one trade here. And you can see which the obvious thing here is we tried to take a sell here. And if we had have just zoomed out a little bit, firstly, we would have seen that we were in a bullish trend. So again, that's probably one of the factors that went against us. And not only that, we're actually coming off this big old demand zone, which was at the bottom of this swing low. So it was actually a bottom zone within the move. So again, that's probably our mistake for not seeing that at the time. The criteria, to be fair, although we were on a bullish hard time frame trend, on the 30-minute, we had actually been breaking some lows. So we came down, we broke that low here, which signifies a change in trend on the 30-minute chart. And then we started making more lower lows and lower highs. So naturally, we were expecting that trend to carry on. But what we didn't see, or because we rushed too much into trade, that if we had have just zoomed out a little bit, that this was actually the bottom of this swing low here. So we're going to see a big old demand zone and a bullish reaction off of that. So maybe this trade we probably shouldn't have taken. And like I say, that's where the lessons learned. And now next time we know to make sure we do our due diligence. The structure itself, apart from what we missed, was actually pretty good. We had our zone, we had our liquidity, we had our break of the liquidity, came back up to the zone, we waited for the close of candle, and then we got in tug and the lows. Obviously not realising this here was a major swing low, or was reacting off a major swing low previously. So had we have seen that, we might have avoided that loss. But like I say, it's one of those where we just have to take it on the chin, not let it affect our trades, or our future trades, and move on to the next one. Now, our next trade actually only came a day later, and it was on Euro USD. And at the moment, we had that 4% on gold, we had that minus 1% on UJ, and then another minus % on GJ. Now, you can see how For a beginner trader, we're currently plus 2% up. We've had that really good start to January, and now we've lost 2 on the trot. Now it's important here to maintain that mindset and not let the previous 2 losses affect what you're about to do in your future trades. You can see here where a beginner trader might get tied up in the psychology side of things. They might not have the right mindset because they've had 2 losses in a row, and they might avoid taking that trade because for some reason their psychology and mindset aren't where it needs to be. And what you should really be doing is taking each trade as it comes, reading the markets, reading what's in front of you, and dealing with whatever you've got in front of you, as opposed to letting previous losses affect the trades that you take in the future. So you just need to trade the markets as you see them. And this trade's actually pretty vivid in my memory because I sat watching with my brother, watching this trade happen, and it happened within about 2 minutes. We got into the trade. It very, very nearly tapped us out, and I know a few people in the community, it did tap them out due to spreads and stuff, but for whatever reason, we literally stayed in by about a pip, and it went to TP within about 2 minutes, probably less than that. So it's one of those where if you did get tapped out, it's just pretty unfortunate, to be honest. But there wasn't no red folder news or any scheduled news at the time. I always wouldn't have taken the trade, but we do believe there may have been some unscheduled news which forced this move just because it happened so quickly. So you can see here, we have an accuracy zone on Euro USD 5-minute chart. We have a liquidity. We have a double lot of liquidity. We came down. We had a fake out. The first candle closed, and it closed bearish. So naturally we're waiting for, we could either have taken this on the flip or the break of candle. Well, we missed the flip because it happened so quickly, so we ended up taking the break of candle, which if I zoom in here, you can see is just above the previous candle. So the break of candle is where the previous candle gets broken and then you enter straight away. Because you can see if you waited for a candle close, it wouldn't have been possible in this scenario. So, and like I say, this happened, if I go down to the 1 minute, you'll see how quickly it happened. There we go. So we got in here, and 2 minutes later, it just hit our TP for a plus 4%. And obviously it ended up going for like a 1 to 9. Obviously you wouldn't hold that because we've got to risk manage ourselves. But like I say, we got a 4% out of it within literally 2 minutes. So we do believe it was an unscheduled news event. But I'm just going to go back to what I was saying before, that just because we've experienced 2 back-to-back losses, it wouldn't stop us taking this trade at all, because the setup itself is pretty textbook. Like I said, I've said textbook multiple times now, but the trades that we have taken in January have all been that. So if you take it in back testing to 9 times out of 10, when it pops up in a live market, you should be taking it as well. So plus 6%, middle of January, we're looking good, and so we'll move on to the next one. Now our next trade is on UK 100 on the 30-minute chart, and it looks a little bit different to some of the previous trades that we've taken in terms of the structure on this one is much, much bigger than the ones we've taken previously. And it goes to show that just because the structure looks a bit messy, as long as it ticks all of our criteria and all of what we look for in a trade, it doesn't really matter what the structure looks like as long as it ticks all the boxes for us to take the trade. And this one does. You can see we get our move up, we get our liquidity, we get a few levels of liquidity throughout, we come down, we get quite a big fake out, we come straight down to the zone, and we react perfectly off it, to be honest. And the thought process behind this was, again, UK 100 has always been very, very bullish, and it's one of those naturally bullish pairs that will always be bullish, apart from the odd times that you can take the odd sell. But for the most part, UK 100 will pretty much be bullish. So we always look to mainly take buys on it. And the thought process behind this was really this gap up here that had been sort of half filled but not fully filled. And as we know on the markets, that gaps that get created always naturally attract price back to it to fill it. So knowing that, we know that as soon as we've reacted nice and bullish off of this, that we can expect at some point that gap to get filled. And as you can see, if I scroll, it took a long while for it to get filled, but it actually does in the end. So our original target was a 1 to 9, which was at the top of this gap, for it to get filled. Now, we didn't hold it for that long. We ended up closing this trade for 2%, which was down which was down here somewhere, just because there was some red folder news and Donald Trump was talking. And as we all know, Donald Trump can and will do what the hell he likes. So there's just no point at all being in any trades when he's talking, because you just don't know what he's going to say, and he can affect the markets pretty violently when, well, whatever he speaks about, to be honest. So we closed as he was speaking, and we closed out for 2%. But again, just because the structure was a little bit messy, it did have all of the criteria that we look for. It had that gap that we naturally expect price to go and fill. And had we have held the trade through that, it would have ended up winning, but we didn't, because we want to err on the side of caution anytime there's some red folder news, and just come out of the trade, because it's not worth the risk, because that trade could have very easily gone the other way and taken us out and hit our stop loss, and then we could even have got caught out by slippage. So there's just no point when you've got red folder news coming up. Just come out of the trade and just bank what you've already got. So, but yeah, that was UK 100. Again, plus 2%. So at the moment, we're currently sitting on plus 8% for the month, which is, again, very, very good. Can't complain about that. And we'll move on to the next one, which, again, is back on GJ. Now, this was one of those trades that we were just very, very unlucky in that it just caught us out not very long after entering the trade. And in back testing, like I said, we would take this 9 times out of 10. So if it's popped up on the live market, we're going to take it. So there's really, really no complaints about taking it. So I'm not really fussed that it's lost. But I'm just going to show you the thought process behind it. Now, I've just zoomed out all the way on a 30-minute for you, just to show you what we're looking at. Now, we had the bullish. We can obviously see that we're a bullish trend, because we're getting higher highs and higher lows. Now, we've had this big move up, and we've came down. We've reacted off the bottom zone here. So again, that's telling us that this swing low here is probably coming to an end, and we're going back to bullish again. Now, the key thing here is this little mini bearish trend. This is the most recent, or the most prominent swing high. Now, we're waiting for this to be broken in order to confirm the fact that this swing low is coming to an end and we're actually going back bullish. And you can see it does in fact do this straight away. We come to here. So if I just pause that there, draw a line for you. There we go. We've broken that high here. So that again is confirmation that we're actually going bullish. So that tells us that this pair is actually now bullish, and we're now looking for buys. So we've naturally got all of this move. If we're going to want this bigger bullish trend to carry on, we're going to expect at some point this high to be taken out. And we've reacted off this bottom zone, so there's no really gravitational pull towards going lower. It's more we're looking for this to be broken in order for the bullish trend to carry on. So we've broken this high, we've got the confirmation of that happening. We then get a little bit of a pullback, and like I say, we're expecting at this point price to come up to here. So we're taking this trade on the basis that this high is now about to be broken, and we're going up to here. So if I now zoom in and I'll show you, I'll just delete all of these. I'm going to go in on the 5-minute, and this was the trade that we took. Okay, we were fairly close to this high here, but again, we're expecting price to come up here somewhere, because we want it to take out the high, which is further to the left. So in our heads, I'm happy to take this trade because we're taking it with the intention of that high being broken, if that makes sense. Now, as with the previous trades, the structure on this looks very, very, very good. So we have our accuracy zone, we have our liquidity, which built up there, we have the break of that liquidity, we have a little bit of a fake out here in the form of that candle. Now, we decided to be a little bit more aggressive on this entry point here. We actually ended up taking a flip entry, which obviously didn't come about. So we tried to be a little bit more aggressive, and it didn't really go in our favour. It sort of went against us. But that is the nature of these aggressive entries, where if they do pay off, they can really pay off and get you a much better risk to reward. But they can be risky at the same time, because you've not had any confirmation in the form of a candle close to show you that the direction of price is about to move. We chose to take the entry, so again, we knew that came with some risks, so we kind of had to take it on the chin that it was our doing. Had we have waited here for a candle close, obviously it didn't give a bullish candle close, we would have avoided the trade. But because we decided to be a bit more risky, we took it on the flip. It's just one of those ones where, like I said, it just went against us. So we're back to our next trade, which was on the 26th of January, and it was on GBP CAD and on the 5-minute chart. And as you can see, this was another 4% win on the 5-minute chart. So we're really making the most of that 1 to 4s now on the 5-minute chart. So that's where our trading has dramatically improved our results. And again, 5-minute chart, we have an accuracy zone. The liquidity is a little bit messy, but it's liquidity nevertheless. We do end up breaking this high, which is key for here. We come back down to the zone. We wait for the candle close. We get a bullish candle close. We take the entry and we take up to a 1 to 4, which we were very, very happy about. And the thought process behind this one, again, it's just very, very bullish. You can see that we're in a bullish trend. We're making higher highs and higher lows. On the higher time frame, we have just reacted off of this zone here. So again, that's further confirmation that we want to go bullish, and we're continuing to go bullish. As soon as we see that we're reacting off this zone on the higher time frame, we move down to the time frame that we actually trade on, look for our entry point, and that for us is just further confirmation that we're going to go bullish. And like I say, that trade ended up paying off with a 1 to 4. So at the moment, for this moment in time, we're actually 11% up. So we're really happy with how this is going at the moment, and we've got 2 more trades to cover. Now, on this trade, actually happened the same day as that GBP CAD trade that we just took. So the purpose behind this trade was this gap here that got created through, I do believe, over the weekend. Yeah, so again, as we know, gaps do create like a gravitational pull towards them for price, where price always seeks to fill that gap before it then intends to move in the direction it intended. Now with this trade, as you can see, we get our zone here, we get our liquidity, we get our break of the liquidity, come up to meet the zone. Now our expectation here is for price to actually come down and fill this gap, but it obviously hasn't filled it as quick as we thought it would. It just took some bit of time for it to get filled, and it did fill it, but way over here somewhere. So could we have avoided it? Maybe, if we hadn't focused too much on the gap and looked and zoomed out and looked at the higher time frame trend. But it's just one of those things where gaps can be pretty powerful in the markets. So we always seek to fill those before we move off in whatever direction that we're going in. So we traded with the expectation of that happening. It didn't. So it's one of those things where we just have to take on the chin and move on. Now this next trade on GN was our last trade of the month on the 28th of January. And at the moment we're currently sitting pretty comfortable on 10%. Now this one I would say definitely could have been avoided. And in theory that was sort of an error on our part as to why it wasn't avoided. Now I think, to be honest, if I'm reflecting honestly on this, we probably rushed into the trade too quickly. And we didn't actually see the way we had drawn the zone. I think what it was, that when we took the trade, we drew this zone here, and we didn't realise, I think we drew it slightly wrong. So the way we drew it, it hadn't actually tapped, but if we had drawn it correctly, we would have seen that it clearly had tapped. So it wasn't really a valid setup. It was a mistake on our part. We ended up, and the structure itself was just very, very messy. So we probably shouldn't have taken it, to be honest. It's one of those things where you just kick yourself in the teeth, to be honest, because you know you shouldn't have taken it. You know you've probably rushed into the trade for whatever reason, whether that be mindset, psychology, or whatever. And had we have done our due diligence, and you know, it's just one of those things where we have to learn the lesson from this. We have to move on from it, and we have to know that next time, you know, we need to slow down and not rush into trades. If I haven't done my due diligence, I would rather miss out on the trade than just rush to get in it and, you know, not really knowing what's happening. So that's one of those ones where it is completely user error on this one. We have to take it on the chin, and we can't let it affect our psychology or mindset. Like I said, we've ended the month plus 9%. So I'm really, really happy with that. And so is my brother Nathan. So we've ended the month 9%, and that really shows that, you know, we probably were more than ready to go on our own, and that's exactly what we're doing now. We're taking our own trades, our own decisions, we're coming up with our own ideas, and we are posting them in our own little Discord for people to follow along if they want. And like I say, we're really, really happy with this month, and hopefully February can continue this good run of results. So if you enjoyed the video, don't forget to like and subscribe, and comment any feedback down below, because I'd love to hear your feedback. Sorry if I sound all bunged up, because I am, but I'm trying to do my best to get a video out for you guys and show you the month that we've had, because like I say, I want to be open and transparent with you. I'm not just going to sit here and show you the wins that we've taken. I'm going to show you all the trades that we've taken, wins and losses, and obviously share some of the lessons that I've learned and hopefully that you can sort of take into your own trading as well. So as I said, like and subscribe, and I will see you in the next video.